Hey there, what's happening, everybody? Tim from Alpha Wolf Trading coming at you with this week's market overview and stocks to watch for trading and investing. Before I get started, I just want to talk about uh, the crazy times that we're living in. And I went shopping yesterday, and it was like a scene out of apocalyptic movie, right? I mean, never seen so many empty shelves in my life. Meat and I mean just everything, bread. It's just unbelievable what's happening out there. A lot of hoarding, and I think one of the scary things, I saw somebody had posted that at the sporting goods store, ammunition is being wiped out. Those shelves are empty, and that's kind of scary. I mean, this is really scary stuff. I've never seen anything like this in my entire life. But I truly do believe that there's going to be a lot of pain. I do think there's going to be a lot of pain. I've got a good friend that manages a hotel, just laid off 70% of his workforce, devastated by it. MGM announcing they're going to be starting furloughs next week and closing 150 bars and restaurants. This is scary stuff, right? So what's happening with the airlines and just industries, convention business, and it's just so many things that are being impacted by this thing. And all I can say is that I do believe that we are going to come out on the other side of this much stronger. I think that there's going to be pain. I think within the market, there have been a lot of walking zombie companies for a long time, and I think that this event could wind up thinning the herd, as they like to say. I think that there are some companies that probably won't recover from this thing, but all in all, I think in the long run that's going to be a good thing. Um, and I think we will come out on top of this, and I think we'll come out on top and we'll be stronger. But I think there's going to be some bad things that happen. Unfortunately, there are bad people in the world, and but I'm hoping that good triumphs over evil, and we'll get through this. We'll get through it, and we will be stronger. So that's my little take there. I'm praying for everybody. I mean, I'm not being selective. I'm praying for the entire world. I hope that we have the strength to get through this thing, and that's it. That's it. I have faith, and I hope you too. And if you can help somebody that needs help, that's really what it's all about, right? All right. So anyway, let's get into what's going on in the markets. Let's first take a look at the economic calendar. We do have events that are coming up. I think we've got retail sales, and obviously retail sales look like they're doing pretty darn good, right? I think the WalMarts and the Targets and the TJ Maxx or TJ Maxx and the BJ's wholesale. I think those are something that maybe you look at because of the fact that people are buying all this stuff and hoarding. Actually, those kinds of places could benefit the pharmacies, right? The and some of these are in my list of stocks to watch for this week, but I think some of the pharmacy companies and are gonna do well probably in this environment. But we also get industrial production capacity utilization, and any NAHB Home Builders Index, business inventories, housing starts, building permits, federal funds announcement. So I think we're probably going to see a significant announcement from the Fed on Wednesday. May even happen before then. We could have it happen today, but there's going to be a press conference with the Fed. That could be a market moving event. We've got weekly jobless claims, which I'm telling you, it may not be this week, but we're going to start seeing an uptick in jobless claims, and that's really something that could tip us into a short-term recession. Depending on how this coronavirus plays out and how long we're locked down, self lockdown, right? Self quarantine, it's still going to impact a lot of businesses. And we're going to see some jobless claims increase. There's no doubt in my mind about that. Hopefully, it's a very short-lived deal. Um, Leading economic indicators and existing home sales. Look, people start losing their jobs. Guess what? Housing market has been very strong. We have low rates, but if you're afraid that you're not going to have a job, you're not buying a house. So this could trickle over into the real estate industry. You could see your, how housing prices begin to decline. But keep this in mind: we still have a very low inventory of housing this, like I said, could be a very temporary type deal. All right, so real quickly, let's go through, because I have a big list. I went through 1,840 different charts this weekend. 1,840 charts, because that was the amount of stocks that had made a 4% or bigger move on Friday, when we had that huge, almost 2,000 point move. So, but let's take a look at the charts and see what the charts tell us, right? So one thing I do find extremely interesting is that, the safe havens, the flight to safety things, didn't perform well. Gold got wrecked, right? Dust actually had a huge, that's the three-time bear for gold miners. But I guess, if you think about it, right, who's going to be working the mines if everybody's in quarantine, right? So I imagine that is part of the reason why we saw a decline, or a decline in gold, and a rise in the bearish ETFs. But it's still considered a safety type play, coming back down to an area of potential price support. GLD is, and the 200-day moving average. Let's see how it reacts at this level. But if fear continues in the marketplace, you could see that more people start to filter into gold. So I think you still keep an eye on it. This could be an interesting little shakeout here. IBB came down, tested a double bottom, tested this area of potential price support. I think it's interesting that the biotech space, is pulling back, because you would think this would be a space. I mean, there are some names, and I want to be real clear about this. There's a lot of garbage names out there that come out with a coronavirus headline. You got to be careful with these things. Then they go up 200%, 300%, short interest. They have no money. They have no approved drug. And all of a sudden they're up 300-400%, right? You got to be very, very careful with these. Everybody's trying to come out with a test. Everybody's trying to come out with, a vaccine. And the funny thing is the companies that have billions of dollars and lots of approved drugs, and those names are actually down. So those are the guys that are probably going to come up with the vaccine, and probably going to get their tests approved and all that stuff. So be very careful with those names. And I think the names of companies with masks and all that stuff, those kind of make sense. They have a product that sells. There's increased demand there. But those are, have run a lot. And at some point, when this thing starts to die down, those things are going to come back to earth. So keep that in mind. IWM, small caps really getting a beat down, right? Way below the 200-day. And one thing that I will point out about all of these charts is, as I look at them, is there's nothing constructive here on these charts, right? They're just one big hot mess. And that's indicative of the volatility that we're seeing. And I think you're going to continue to see that type of volatility, because I think the headlines are going to get worse in the short term. We're going to see more cases. We're going to see more deaths. We're going to see job layoffs and closings and lots of negative headlines. So, and then we're going to see counter stuff coming from the government and the Fed, and maybe some positive news on the medical front. So we're going to be whipsawed around a lot. And I think what you need to do in a time like this is, if you're an experienced trader and you can play the volatility, there's going to be some tremendous opportunities. I got to tell you, I screwed up. I typically played TVIX, UVXY, and I didn't this time. And I don't know why. I really kind of screwed it up. I had it on the list for all the members and myself, but I just got so wrapped up in, I guess, other things that I screwed up on that. But there's no, everything is just a big hot mess. So this is definitely a time to be cautious, but it's also a time to build your watch list, or build your wish list, I should say, of potential companies that you'd like to own for the long haul. Every company is getting taken out to the woodshed, and it doesn't matter. Look, there are going to be sectors that are going to get crushed. There are going to be names within those sectors that may never recover. And then there's going to be names in those sectors that are unfairly being taken out to the woodshed and are going to probably have a very nice return if you're a patient individual, right? I'm not suggesting to go all in. I'm suggesting that if you have companies that you like, identify areas of potential support and resistance and start dipping your toe. Don't go all in thinking, oh, it can't get any cheaper, because great companies can get super cheap. 2008, Las Vegas Sands got down to $3, right? Look where it is today. Look where it went, right? This is a temporary deal. It will end, and we will come out. There will be companies that will come out on the other side of this much stronger, and there will be some weak companies that don't make it through. That's just the way it's going to be. You want to make sure that you're aligning yourself or identifying the companies that can make it through and come out stronger on the other side, right? All right, so Nugget, right? Got a big drawdown there. I don't know that those will bounce, even if gold bounces. I'm not sure about those. IYT Transportation, obviously getting destroyed, right? I think my mom told me you could fly to Florida for $35 round trip or something like that. Some crazy number, but who's going to be flying? Nobody, right? How much can the government help these companies? I don't know. We'll have to see how it plays out. But there probably maybe some companies that don't make it through, right? So IYT, we've broken way below the 200-day moving average. There's going to be a lot of pain in this sector for a while. But that doesn't mean maybe you don't start to dip in a company like JetBlue or Southwest Airlines or Delta. QQQs, we broke below the 200-day. We came down to an area of potential price support, bounced a little bit. Let's see how it holds out. SMH, same thing, down to an area of potential price support. Did test it and bounce. If we break that support, it could be a painful break of support. So keep that in mind. S&P 500 pulled back to an area of potential support. Actually, we broke through this price support up here, pulled down to another area, bounced a little bit, but like I said, I think we're going to see more negative news ahead, and I think we're going to be whipsawed around. And I'm just not confident that we're finding a bottom, right? Bottoming is a process where you start to trade around in a more narrow range instead of these big volatile moves. We start to narrow out, right, and build some type of a base. That's what we want to see. I think we're probably going to come down and retest the lows, right? What we need to do is we need to retest and hold, and then kind of consolidate sideways, build the base, and that kind of gives you an indication that maybe we're finding that bottom. Right now, that isn't happening. TVIX, UVXY, like I said, huge miss on my part, have had massive moves, volatility, fear index, whatever you want to call it. A lot of volatility, and I think those will continue to be in play. But when you start to see those kind of consolidate sideways, that could be the indication that fear is abating, right? And maybe that's it. When these things break, if we start to, I really don't want to see us just rip back higher. I really want to see us go through this process of bottoming, and I don't want to really see a V-shaped snapback. I think we will get some of those, but those are probably just short-term trading opportunities. USO, of course, got crushed, right, with the Saudi Arabia Russia thing. One thing I will tell you is that during my going through my scans, the first portion of my list, the biggest percentage gainers were a lot of oil and energy names, and that I'm sure is because of the strategic petroleum reserves, the announcement from Trump that they're going to add to those. They're going to buy a lot of oil and add it to the strategic petroleum reserves, which is smart, and obviously gave the industry a little bit of a lift. If that, I don't know how long that continues. I think that is one specific space that is we're probably going to see companies go by the wayside. Lots and lots of debt within that industry, a lot of junk debt, but there are going to be winners in that space as well. I think you're going to get some really huge rip your face off snapback rallies within that space, but it is not for the faint of heart, and you need to be extremely selective. I've got a couple of names in my list this week that are in that space, and I probably will look to dip my toe with some select names. And one name, there are a couple of names that I already own that I'm willing to hold for the long haul. So aerospace and defense has been really beaten up badly. I think that there are some, for the long-term play, for a long-term investment type play, I think there's some great names in that space that are getting to some really interesting valuations. It was overvalued. I think we're starting to get to levels where valuations are make sense or even getting a little cheap. So home builders, like I said, this could be really impacted, especially if we see an increase in layoffs and unemployment. But hopefully that'll be a short-term thing, just like this coronavirus will be a short-term thing. That's the hope. Building materials. If you're not building homes, guess what's going to happen? You're not going to sell a lot of building materials. So that's gotten crushed. XLE Energy pulling back. Did bounce a little bit. We'll see if it gets any kind of follow through to that bounce next week. XLF Financials, right? All these companies that could potentially, have bad debt or have a lot of debt that could potentially, wind up defaulting on the debt. Who knows how many industries will be impacted by this? But there are some that aren't going to make it. So financials, I think, are probably a tough thing to look at right now. Industrials pulling back. Same thing. I mean, not a healthy looking chart below the 200-day. XLP Consumer Staples. Now this one's interesting because it got beat up, but go to the store, right? Go to the store and try to buy toilet paper. Go to the store and try to buy paper towels or wet wipes or cleaners, disinfectants, right? I mean, it's just unbelievable. So this one is kind of interesting to me that it has gotten beaten up so badly, and maybe a sector to keep an eye on because clearly they're selling a lot of stuff. XLU, although I will also say I read an article about the guy that bought 17,000 bottles of sanitizer for $1 and was trying to sell them for $20 on Amazon. Got his license pulled, and from Amazon and eBay can't sell the stuff. And you know what? I think it's terrible that I understand the need to want to make profit, but selling $1 of sanitizer that you bought for $1 for $20, not exactly a cool. So look, some bad things happen out there, but it appears as though those things are getting addressed, and I don't know. Keep an eye on this consumer staples sector. XLU, very interesting. Also, the fact that this has gotten beaten up. XLU utilities, typically a safety play, gotten just destroyed. I got an interesting letter from Nevada Energy. They're not going to shut people's energy, or the water district's not going to set off their water during these times if they don't pay their bills. I think that was pretty awesome. But utilities typically are, a safety haven, and I did see a lot of utility names actually start to bounce. That could be a space maybe that you take a look at. XLV Healthcare bouncing a little bit. I think there are some names within the healthcare space that are getting to attractive levels, more of long-term hold investment opportunities, but definitely worth keeping an eye on. XLY, consumer discretionary, that's going to take a hit, right? Restaurants and bars and these, casinos, not looking too good, right? And probably going to see a lot more pain there. There will be sectors that are going to come back faster than others, and I think this could be impacted for a while, but there will be a tremendous amount of pent up demand when we get through this, and those things could snap back fairly quickly. XOP, oil and exploration, a little bit of a bounce on Friday, but there are going to be names that are going to disappear within that sector, and I think that's a healthy thing. That's a good thing. There will be consolidation, and there will be some that go away, and that ultimately, in the long run, will be good for the space. And then XRT retail, as you can imagine, nobody going shopping, malls and crowds and all that stuff, pulling back, but I think there are names within that sector actually that could be pretty attractive. So that's my take on the overall markets. I don't think we're anywhere close to the volatility being done. Even if we get a continuation on Monday, there will be names that are going to bounce, but I think you need to be very careful. You should not be chasing. If you have levels that you identified as entry levels, dip your toe, identify whether it's a day trade or a swing or a long-term hold opportunity for you before entering the trade. And then if whatever it is you deemed it to be, stick to that plan. Do not let a short-term day trade turn into a long-term investment, okay? All right, so let's take a look at my list of stocks to watch. As you can imagine, it's a pretty long list because I went through 1,844 charts. So let's get to it right off the bat here. So let me pull up. Oh, before I get into, hold on a second. Before I get into those charts, let's take a look at something here. And this is something I've been pointing out for a while to the pro members. The T2106 and the T2107, T2108, right? So T2106, we got down to negative 250. That's the McClellan, the fear oscillator. We bounced a little bit on Friday. Actually, we bounced quite a bit. We're getting down into the negative 300 area. That's a lot of fear out there, right? We were due for some kind of a relief rally. And then let's look at the T2107. Now remember, so when we were up here, I was telling everybody, look, we're at the top of the range. If you've got profits, probably not a bad time to lock them in, right? And now we're getting to this area where we're extremely oversold. Doesn't mean that we can't stay down here or even go lower, right? Remember, 20 and below means things are getting overdone on the downside. Now when we get into single digits, things are looking really extreme, and we were actually almost getting down to test 1987 lows on this thing, which is like 0.41 or 0.63. Uh, we got down to 1.6. I mean, we were really we are absolutely in panic mode here, and we are oversold and overdone. But it doesn't mean that we can't go lower, right? And what I do believe, though, is that there is going to be a significant rip your face off rally, um, because nothing goes straight down, nothing goes straight up forever. It's just going to happen. So we are looking at indicators that tell us that things are extremely overdone, but it still means to me we've got a dip. We can, look, I know it's tough. Hold your nose, plug your nose, and pull the trigger. Start dipping your toe in. Don't go all in, but start dipping the toe in. This could get down to all-time lows. This T2108 could get down to 1987 levels, right? Way back here. Look at this. This is a monthly chart. All the way back here, where it got, down to 0.40, 0.40, 0.7, 0.6. Bottom line is it got under 1, right? But look at the snapback that happened after that, right? Now it was funny. Carter Worth, I think, it was on Options Action, indicated that any time that the market pulls back 20% or more, it takes 2 years on average to get back to where you came from. That could be very possible, right? That could be very possible. I think that there are individual stocks that will get back to where they came from much faster than 2 years because they're in better shape, right? So keep that in mind. This could be a very long process to get back to where we were for the indexes or for the markets, but individual stocks, though, some of them are going to rip right back to where they came from in a very short period of time. And hopefully you can identify a few of those. All right, so let's get to the list of stocks to watch for trading and investing. OSUR, nice little pop medical instrument play on Friday on good volume, really good volume, 4 million shares traded hands. Quite a move. Right into resistance, flirting with the 200-day moving average. Now we do have the 50 below the 200-day. I'm looking at this as potentially just a trading opportunity on OSUR. It is coming up into the long-term trend line, right? We've got a long-term trend line, got the 200-day moving average. If we could take that out with some conviction, I think you get some follow-through. I'm not sure why this popped on Friday, but it's one to definitely keep an eye on for a short-term trading opportunity. Vapo, another one that acted a medical device name, right at an area of potential resistance. So we've got a potential flat top breakout. Now, this one's a bit extended. It's the second day of the move. Could have a 3-day run though, right? We get a red to green type move, break above the 200-day. Could be a day trading opportunity. And Vapo, maybe an entry somewhere around 11.50, $11, somewhere in that area. Looking for it to, red to green, right? Take out 13. There's a gap to fill on the daily. Got some things going on here that look interesting with Vapo, but day trading opportunity. IPI. So look, this one is agricultural inputs and oil and gas related. They supply water to the oil and gas industry, and it's gotten pounded. Full disclosure, I have a long position in this thing, and I am looking to add to it. If we get underneath the buck, I'm going to look to add to my position. I like this for a long-term hold. We're going to be coming up into the planting season, spring planting season. look, we're still going to have to plant stuff. I think there's even going to be more demand. So I don't know. Long term, I think this one turns around. There's been a lot of insider buying at three and change and two and change. I'm willing to, this is kind of a turnaround story, turnaround play, and it's unfortunately in a tough sector, oil and gas. But I like it for the long term, and could be looking to dip my toe and add sometime this week. EGHT. So these guys, so one of the things that I think that is going to happen is that there are going to be things that are forever changed in our lives because of this event. I think manufacturing supply chain. I think a lot of companies are going to reevaluate, their supply chain and having something come from one, one area. Or 80% of our products come from one place. I think that that's going to change. I think another thing that's going to change is work at home. I think companies are going to recognize that work can be done from home, and some of these companies that provide that type of service, I think, are going to benefit in the long run. I think you're going to have more people working from home. Um, so 8x8 video meetings to help individuals. I think they had a great quarter recently. This thing got whacked pretty hard. Got a little bit of a bounce on Friday. Back this out to a longer time frame, and actually look at where it hit. Right, we kind of hit this long-term trend line at $11, where there's actually some support there. This could be an interesting area to watch. Interesting name to watch. I think it's in an interesting space, and it's more of a long-term hold or swing type play to me. So worth keeping an eye on. 8. Rad. I think that these pharmacies are, going to do well. Rad in this environment just had a pullback to the 200-day moving average. I think it's got I don't think it's got a small float, but it might have a fairly sizable short interest. Let me look here. Um, RAD. So it's got oh no, looks like it's got a fairly small float with a big short interest, 51 million shares in the float for Rad, and a big short interest, 32%. So, a lot of debt here. That is the potential issue, right? Maybe this company goes away completely, but because they have a negative cash flow, that's not a good thing to see. I could see how this would be a high risk play swing. Um, it pulled back to this 200-day, bounced off of it, and maybe that's the level to keep an eye on. Maybe $10, right? 10 looks like an area of price support. But this could be interesting to keep an eye on for a trading opportunity, short-term swing. Very, identify your level of stop and stick to it. Put a stop in. Maxer has been one of my favorites for a while. This is a turnaround story. I was really hoping I was going to get this thing back down into the $6 range to jump back in pretty hard. It got down to 8 and change, and that probably was my opportunity. One of the things that I pointed out to the pro members over the last couple of weeks is, there's a lot of names that are down a lot, and their charts look terrible, but very few of them actually have a candle out of the lower Bollinger Band. A lot of these names are actually just very controlled takedowns within the Bollinger Band, which kind of indicates to me that we're not done. There probably is going to be one more capitulation sell And when you see the candle get completely out of the lower Bollinger Band, that maybe that's the time where we start to get a snapback. So Maxer actually had this candle completely out of the lower Bollinger Band and then caught a little bit of a bounce on Friday. Now I'm kind of hoping that maybe we can pull back and retest this 840 area. That would be a long-term hold play for me on Maxer. That is a long-term hold investment type play. We would be testing this trend line. I like it a lot. Worth keeping an eye on that one. And RMNI. So looks like these guys reported earnings, which were pretty good. And a software application firm, nice candle on Friday with some pretty good volume. I mean, day trading opportunity, I guess maybe even a potential swing. You've got the 50 crossing above the 200 day, right? So you've got a golden cross happening here. You can take out this long-term trend line. This thing could be very interesting. I think 5 is a potential target for this. You take some off, maybe hold some bottles and see if we can continue to move higher. But this RMNI small float, pretty interesting looking setup there on that one. MR, oil and gas name that had a beautiful flag going above the 200 day. You got the golden cross, and this thing actually wound up cratering, right, because of the whole space itself. But it broke this area of support. Stochastics are starting to curl up. I'm just, as a short-term swing trade opportunity, maybe on this trend line break, you get a pop up into the 4 and change area on this MR. I think it's worth keeping an eye on it for maybe a short-term trading opportunity. I didn't put it on this list, but I'm going to go ahead and point it out now. WTI is a name that I happen to like quite a bit. I've started to build a position in, and I am looking to potentially add to that position. Management owns about 35% of the stock in this company. They are aligned with the shareholders. I think the CEO is a pretty smart cookie. I like this name as a short-term trading opportunity, and potentially I probably would keep some for a longer-term hold or swing play. I think these guys could either get acquired, or maybe they could be the company that does some acquiring. If some names go by the wayside, maybe they get some good properties for pennies on the dollar. Regardless of what everybody thinks, oil is going to be here to stay for a long time to come. We're not going full electric with vehicles for at least probably another, I would think, 10 years or so. But we'll see. I still think oil and gas companies are going to be needed, and a thinning of the herd would probably be it's probably what has to happen in this industry. So, all right. So getting back to the list, INSG. So another, going with my theme of work from home, quarantine, and all that stuff. These guys reported earnings. They disappointed on the earnings, but it had already gotten beaten up pretty badly. I own this name for the long haul, and I sold when we had this big run, and now I'm looking to add to my lottos, and we're in an area where, so I already did add a little bit last week. I did dip my toe a little bit last week when it was down around $4. And if it gets down to 350 or lower, I'm going to add again. I hope it comes down to 225 so I can add more aggressively. I think that, even in their call, if you go through their earnings transcript, they announced the fact that they are seeing a huge increase in their mobile Wi-Fi hotspot things for people working from home. So, this coronavirus thing, I think this is one of the companies that could benefit in the long run. Another information technology type company, has gotten beaten up really, really badly. Broke through support. Let me see if this is all-time. No, it's not all-time lows, but it did pull back to an area of potential support. So this one is kind of interesting to me. Um, maybe it does a double bottom test around $1. That could be an interesting spot for it. I think it's worth keeping an eye on it. It got a little bit extreme. We didn't have a candle completely out of the lower Bollinger Band. This might actually put in a bear flag and head lower. But I like the company. I've been following it for a while. I'm kind of keeping an eye on it. It trades really thin, but it's on my radar. BHC, I think this is one of those names within the drug manufacturers that's gotten pretty beaten up. CEO has bought shares 23.67, 30,000 shares, 23.30, 22.90, right? A lot of insider buying in that area, and we're getting back to levels that we saw in 2018 on BHC. I think if this thing breaks down, look, could it go to 7? Could it go to $8? That's possible, right? I think if you get down into the 1450 area, you're getting into an area that's very interesting and maybe an opportunity to dip for a long-term hold type play in BHC. EXTR, these guys do internet or Wi-Fi in stadiums and stuff like that. Guess what? Nobody's going to stadiums. They announced a big share buyback. They already pre-announced that this coronavirus was going to impact their numbers. That could get worse, but I think these guys are actually in. I think they're long term in a very interesting business, and I think they will recover. $3 is kind of acting as a support area. I may start to dip for a long-term hold in this. If it breaks below $3 with conviction, we could easily come down and test, the $2, maybe even come back and retest the $1.17 level. At those levels, I'm willing to buy a lottery ticket in EXTR. This is not a great looking long-term chart. Monthly chart, we could come down easily and test, 235. At 235, I could start to dip. I am definitely keeping an eye on this for a long-term investment type opportunity in EXTR. GDEN, Golden Gaming, has gotten, as you can imagine, with all the casinos, has gotten just crushed. These guys not only own a couple of they own the Stratosphere on the Strip, which they just remodeled. They bought a couple of Edgewater, I believe. They bought a couple of other casinos. They also have a bunch of sports bars here in Las Vegas and in Montana, about 70 or something like that. Those are going to get hurt. They're going to get hit. And this is what I'm talking about when I say I'm watching these things. They're not this is an ugly chart. It's gone from 20, right, 21 down to $8. But look how controlled it is, right? It's just well within the Bollinger Band and just being walked down. And I do believe that this probably has more to go. There's going to be more pain to come for that industry. However, I think there's also going to be a ton of pent-up demand when things start to normalize. And this is one that I want to start dipping a toe in. Could we get down to $3? We could get below that, right? We could go test 270. We could go test $1. I don't know. If you look at the monthly chart, stochastics are just curling down. We're going to take out some key levels. These guys are going to have some rough, a couple of rough quarters. But I think they'll be able to overcome, and in the long run, I think this is going to be an amazing buy for the long run. So I'm keeping a very close eye on Golden Gaming, and at some point, we'll start dipping to build a position in that name. VHC daily. Had a big pop on Friday. They actually got, this is like almost crazy, but they actually got the $440 million from Apple. Now, I will say this. The company is pretty much fairly valued around $440 million. Shares outstanding. So it's not like it's cheap. So it had a pop and then it pulled. If this thing pulls back to 450 or so, I think it gets interesting. Stochastics are starting to curl. I think it shook some chasers out. You have to assume that they maybe are going to do something with that money. Maybe a special one-time dividend, and maybe they buy some businesses, or they invest in their current businesses. I think that, right now it's fairly valued at what they basically got from Apple, which I'm shocked that they got it. But that's assuming that they don't do anything with the money that is useful, right? They can't grow that money. They can't maybe go out and acquire a business. Think about having $440 million in this environment, right? These guys just got a check to be able to go out and maybe acquire somebody on the cheap, right? I don't know. Worth keeping an eye on this one for a potential swing, maybe even a investment in VHC. RBBN, another one of the communication companies. These guys just did a big acquisition, but within that space of work from home, some insider buys. They did, look, a lot of debt here. That could be a cause for concern. They work with Microsoft Teams. I think this is an interesting potential turnaround story. Full disclosure, I already own it. But I could be looking to potentially add in this RBBN. So worth keeping an eye on that one. DEAC. So look, it was really funny when the casinos were getting, this is not funny. This is actually kind of sad. When the casinos were getting pounded, everybody was like, yeah, buy DEAC because that's perfect. You'd be able to, bet from home. And what a better better company to have than a company that, where if people are, quarantined, they can still gamble from home. Yeah, well, didn't take into consideration that maybe the NBA, the NHL, the MLB, the NFL are going to cancel all these events. The soccer league, right? Yeah, there's nothing to bet on. So this thing is getting absolutely crushed. However, this is one that I think if it gets down to some significant, gets down to 10 or lower, could be a tremendous buying opportunity in DEAC. Now, it bounced a little bit on Friday, but I think we're going to see more pain in that space. We'll see. But this one could be worth dipping in this area. Start to dip, and then if it gets below 10, you look to add for long-term hold. GLW, I love this name as a long-term hold play. I wanted it below 20. It actually got below 20 for a minute. Little bit of a bounce on Friday. I think this is a great investment type play. Would love to get this in the teens. $19, I would love it there for a long-term hold play. They are in so many industries, and they're going to be in so many industries for a long time to come. Interiors, automobiles, drug packaging, phones, 5G phones. They just had an announcement not too long ago that they hit 800 gigabits across 800 kilometers and ICE6. They are involved in 5G with Qualcomm. There's so many things that these guys are involved in, and they've been around for 100 years. I think they'll be around for another 100 years. I think this is a great opportunity for a long-term investment. And if it gets into the teens, that's where you want to start to dip. I got to go. Sorry this is taking so long on this video. Domo Oregato. I think they report next week. It got beat up. There was a candle that was out of the lower Bollinger Band here a little bit. starting to bounce. If they report good numbers, maybe we get some kind of lift in Domo, day trading opportunity there. BDSI, little reversal candle there, testing the $4 holla as potential resistance. It looks like they reported strong earnings, and that was the part of this reversal here. So worth keeping an eye on BDSI for a trading opportunity. 10, Carl Icahn is involved in this name, but had CFO and CEO buy shares 926, 948, and I think Carl is trying to take over the company. It's gotten pretty beaten up, down to 4 and change. I think this is all-time lows. Just no, it's not. Could actually get down to about a $1.25. It looks like maybe it's trying to find a bottom. Probably more of a swing or could be a day trading opportunity, but probably more of a swing. If it breaks down below 450, that could be problematic for the stock, but I'm keeping an eye on this name. UIS, big gap up off of, I think they sold off a division. It's given all of that back and then some, broke back below the 200-day. I think the company is in a much better position financially after this sale is done. It came back to an area of potential support, filled the gap on the daily. I think UIS could be an interesting swing play between 850 and 750, maybe start building a little position. ZYXI actually has held up fairly well. Pulled back to the 200-day, finding a little bit of support there. Could be a trading opportunity. QTNT, these guys, insider buys March 2020, 40,000 shares at $4.01. They have a conference call coming up on March 25th. So, not next week, but the following week. It's kind of gotten out of the lower, had a candle up piercing the lower Bollinger Band. I don't know. This one could be interesting area of potential support. Back this out to a monthly time frame. This is an area of potential support, $4. If that fails, the next area could be somewhere around $2.50, $3. I don't know. It's kind of worth keeping an eye on QTNT, maybe for a day trade, maybe for a high risk swing. Maybe you wait till after earnings, but I kind of like the look of it. Zynga gaming, the sector itself, I think, is an interesting spot. If you're going to be stuck at home and quarantined, what are you going to do? You're going to play games, and I think Zynga has held up pretty darn well. Plus, they got this new Disney game out. Apparently, that's doing pretty well. It pierced below the 200-day, bounced back. This could be a swing type play and a break back over 650, and then maybe we go up test these highs somewhere around 750 or so. But interesting. Activision, same thing, right? Pulled back. They just released new Call of Duty portion to their game. Battle Royale, I think it's doing well. This thing had an interesting, pierced the 200-day, bounced. This is more of a long-term hold investment type play. I would love it to pull back to about $45, but I don't think I'm going to get that lucky. So more of a long-term type play. CDTX pulled back to the 200-day. It looks like it's trying to hold on. Stochastic's starting to curl up. I don't know. It's kind of got an interesting look. If they come out, it's worth keeping an eye on this bad boy for a potential day trading opportunity with some volume. CNDT, Icon involvement. So this is another one that Icon's involved in. About $100 million worth at 764 average. And this thing is sitting at $2. I think it's kind of interesting. This is all-time lows for this thing. So look, we're in uncharted territory. I don't know, could it go to cents? Possibly. But it's piercing the lower Bollinger Band. I don't know. I think it's worth maybe keeping an eye on this thing. I set an alert at 189. If it breaks below that, I'm interested to see where it may start to find support. We start to see some consolidation. RRR, another casino name, Red Rock Resorts. You know, the Fertitta brothers involved here. One of the Fertittas bought 700,000 shares in August 1871. Not looking too great right now, but I think Red Rock will survive and will thrive. Um, it's all-time lows for this stock, right? So difficult to identify, but could be in an area where I start to dip. If it breaks below 740, I don't know. I'm going to have to start to dip a little bit into this thing. OPRX, I've been watching this. It's a super thin trader. It got crushed a little bit off of their last earnings. These guys they actually have some freaking news that just came out. I don't like seeing headlines like this. They just got, I guess, coronavirus text message alerts. Text virus to 51 to subscribe to the service. Yeah, so I mean, look, I like this company for what they're doing. They just announced some two new contracts. I'm not crazy about this headline with the coronavirus thing, but hey, whatever. I like this for a long-term hold. I like the direction this company's headed in. Worth keeping an eye on this one. I'm looking to dip. I actually tried to get a fill last week. I didn't get filled, but I am keeping an eye on this OPRX. KMI, Kinder Morgan. So this is one of these names that in the oil and gas industry that I think is going to survive and probably thrive. The CEO and founder, has been buying consistently insider buys, 15.30 to 27 bucks. We're getting back down into the $15 range. If it comes back to 11.50, which is, just to make sure, all-time lows, I got to dip, man. I got to dip in KMI for a long-term hold. I just like it. I like the name. I like the company. You got a Bollinger, you got a candle completely out of the lower Bollinger Band here. It pulls back into the 1450 to 11 and change range. I just got a dip. HMI, here's a name that has held up extremely well through all the turmoil, right? Scientific technical instruments, flirting with the $14 holla. Actually trades decent volume. You got a clearly defined area to trade against, 1260. I think this is a pretty good look. HMI worth keeping an eye on. SPCE, there's some kind of an event happening next week. Could put this name back into focus. Got up to $42. Now sitting at about 14 and change. You got the 200-day moving average at about 13 bucks. You can maybe trade against that level. This could get some play next week. Thin stock. Worth keeping an eye on. Space for a trading opportunity. WW, another one that I think is getting to interesting levels, right? Oprah, I mean, right now, not a lot going on in the whole, stadium thing. But I think, this scare of the coronavirus is going to make people want to get healthy. I really believe that. And after it's all said and done, this is a company that could really benefit from that. They just announced not too long ago that they had their best signups ever for the quarter. So I think this is an interesting name. Got Oprah in there. It's getting to the levels of potential support. It gets down below, $17. Let's look at some areas of potential support. Right, so 17 is an area of potential support. We break below that. Could we be heading to $10? That's possible. 11.50, 10 bucks. That's possible. And I think that those would be opportunities for a long-term hold type play. 10 bucks would be awesome. Could we go back down and retest, all the way down to 450 possibly? So you buy a little at 10, and then I'd be looking to add at 450. I mean, stochastics on the monthly are curling down, so clearly we could go lower with WW. But I think this is one. There's a big short interest in there. I think it's one you keep an eye on for potential opportunity for a long-term hold. BJ is, BJ's wholesale. I think these guys are probably doing well right about now after what I saw this weekend. It's kind of testing the 200-day moving average and the $24 holla. Looks like $20 held, 20.50 held the support. I don't know. Worth keeping an eye on that for a short-term trading opportunity. CLDR reported earnings, pulled back to an area of potential support. Stochastic starting to curl up. I like the look of CLDR and potentially a long-term hold type play. Worth keeping an eye on it. It might, if it breaks below this 690, could be heading down to $5, and then I'd really be interested in that one. ALLT, another one of the communication equipment names, mobile video optimization. Pulled back to the 200-day moving average and bounced off of there. Stochastic starting to curl. I like the space. I like the sector. Filled this gap on the daily. I think they reported good earnings, but with the market what it was or what it is, I think this one's interesting for a potential swing or long-term hold play. And the same thing with INFN. I like this one as a communication equipment play, pulling back. Looks like 380, 390 is trying to hold the support. If it breaks below there, could be heading back down to test the 290 area. If that were to happen, I would be looking to get back in aggressively in INFN. I've traded this in the past. Insider buys 4 and change, 3 and change, CEO, director. I like this as a long-term hold consideration and would look to get back in somewhere between 290 and $4. And that's it. That is my entire list of stocks to watch for potential trades and investing. Crazy. It's going to get crazier, people. Be careful out there. More importantly, be safe. And, like I said, we're going to come out on the other side of this. We're going to come out of it much stronger. So be careful out there. Define your plan. Don't panic. Don't panic sell. Don't panic buy. Be careful. And God bless y'all. And I'll talk to you soon.